The wellness, the longevity, those trends are here to stay. People want to live better. They want to live longer. They want to have it. They want to better themselves. And I'll tell you something else, and that goes back to the to choosing your amenities without bashing anything else, right? I don't know if a specific amenity gets better rating than other, but I feel that when there's a big sizable gym with all the equipments that you have and it can hold a bunch of people, there's a community in that. When those
Oh
people
yeah.
go and sit one next to the other in the dry sauna, there's a community in that.
What if the biggest mistake most real estate investors make is selling too soon? In a world obsessed with quick flips, rapid exits, and chasing the next deal, today's guest believes the real wealth in real estate comes from doing the opposite. Instead of flipping properties, he builds them to last decades. Since 2010, he's developed more than 1,200 multifamily units across 30 plus projects on the East Coast, focusing on something most investors overlook: transit oriented development and long term multifamily assets that thrive through every real estate cycle. And his philosophy is simple but powerful: date the market but marry the building. Today, we're diving into multifamily development strategy, long term real estate investing, transit oriented communities, and how smart developers design buildings that perform for 20 plus years. So, if you want to understand how successful developers build wealth through multifamily real estate, you're going to love this conversation. Welcome to Real Estate Roundtable. Today's guest is Yuval Shram, founder and CEO of Tay Investments, a multifamily development firm based in New Jersey. Yuval started Tay Investments in 2010 during a time when the real estate market was still recovering from the financial crisis. While many investors were focused on short-term deals, Yuval took a different path. He focused on building high-quality multifamily communities designed to perform for decades, not just years. Fast forward to today, and his team has developed more than 1,500 residential units across 30 plus projects through the East Coast, with a strong emphasis on transit oriented development, sustainable urban growth, and community driven amenities. One of their newest projects, Hue Soul in East Orange, New Jersey, brings this philosophy to life with a wellness focused living environment featuring fitness facilities, saunas, cold plunges, and a design centered around long term resident well being. But the real story behind Yuval's success isn't just about the buildings, it's about the philosophy behind them. Because in an industry that often rewards speed, Yuval built his business around patience, longevity, and designing multifamily properties that hold value for decades. Yuval, welcome to the Real Estate Roundtable.
Thank you for having me. Thank you.
So, Yuval, take us back to the beginning for a moment. What first pulled you into the world of real estate development and multifamily investing?
To be very honest, it wasn't like a huge, long or few decade plan that I made when I was really young. I was just overseeing the markets. I was working in capital markets in out of the university kind of first few jobs. And when the market crashed, it seemed interesting. And from one thing led to another. It seemed like, wow, real estate market in the US is so inexpensive. Why don't we try and go and see what can we do? And really one thing led to the other, and we started very small, 2 family homes, 3 family homes, renovating, trying to rent it out and grasp how everything is done. Starting it out, I was a tenant myself, never held a mortgage of my own, and one thing, one step at a time.
And was there a specific moment when you realized this was the path you wanted to pursue?
Um, I, to be very honest, and it's quite romantic, at one point in my life, my wife, my dear wife, looked at me and said, "This is what you do. Realize it already and stop looking right and left about it. And this is it. Enjoy it." And then I looked at her and said, "Okay, I can do this for my life. That's okay." And that's it. That was it. It was a long while ago.
I love it when the wives, they always help us steer us in the right direction,
True,
man. Every single time.
true.
I get goosebumps when I think about that. My wife is my anchor, and without her, I wouldn't be where I am because we need these people in our lives. They always help us to guide us in a way from the back scenes. We're the front facing, go in, go get it. And they're like, hey, I think this or that would work out really well for you.
Oh yeah, oh yeah, yeah. Your wife's your best friend. She knows. She has. We have the ability to look from the side at one each other's life and just see the rights and the wrongs. It's easier from the side than when you are in the scheme of things, and that's just what happened. I remember that conversation was like, okay.
And what were those early years like starting Tay Investments in 2010? It was a wild market back then. So tell me about it.
First of all, I was a younger individual. A lot of things were wilder, right? And second of all, when you were younger, you just want to eat everyone and then eat everything alive and be like everywhere that you can because you want to work 24/7. You have all the energy and everything excites you and you just want to be the first in everything. So that was the mentality. And that met, and that's just pure luck, right? There's no way around it. It just met the best timing of the market because the market has just recently crashed and was coming up on this high rise and long-term rise, and we just surfed it all the way up. And it's like they say it, and it's this quoted saying that luck needs to meet effort. It really is. It really is. But if your effort isn't there, nothing's going to help you. But if you're fully up to things and you're really energetic about it and you have your idea and you know what you're doing and then some luck meets you, that's a perfect scenario.
Were there any early deals or project that really shaped how you approach development today?
I have to say no in every, of course, that now I learn less than before because as you go along and you're more experienced, so you kind of checked most of the points. I still learn every project and from a lot of different people, methods and how things are done. Things in the industry change as well. But I think that if I have to map one project, it was a project that we came into to build in the midst of someone of a constructor that failed, and it was about 50 or 60% completed. And until then we did renovations, right? It was smaller work, and we came in, bought a 20 unit building. Now we're building 500 units, but back then 20 unit building was enormous, right? And the guy was 50 or 60% built, and he had a problem. He had a financial problem, and we came in as the new partners to the deal and helped him finish. And he finished up the work, but we were just like banking him towards the completion. I looked at him and said, I can do that. If this guy can do this, I think I can do that as well. I remember that. And that was a moment of, we can develop from scratch as well. This guy does it. And it took me a year or two to jump into the water, but that was maybe, if I have to mark something, it was that.
For sure. My next question was going to be exactly your answer here, because every developer has that moment where things start to click. And this was your moment. You're like, oh my God, I can do this. And you get firsthand experience when you get into a deal like that and you start funding it, and you can go there and take a look at how everything's being done. And you learn so much from looking at it from the outside perspective that you're like, I can manage that. I think I can start to, and that's like, boom, one thing after the another, and then now you're building 500 units. Isn't that crazy?
I gotta tell you, not in a, of course, in a humble way, but not in a. Listen, when you walk outside the door, right? Every building, every house, someone is building it. And there's a
Yes.
lot of housing in the world. So it's not that complicated to do once you get the hang of it and you understand it. Like everything else, it takes experience and knowledge and hard work. I'm not afraid of it anymore. In the beginning, I was
And
afraid, but I'm not afraid of it anymore.
of course, we learn from all mistakes, which is, what mistakes did you make early on that taught you the biggest lessons?
Wow. A ton of mistakes, really, a ton of mistakes. But if I have to mark one big one, a big tip, it's the human beings around you. Really, it's just that, whether it's the painter, the smallest laborer, or the general contractor, or the banker, or the lawyer. It's when you put yourself, you surround yourself with good people that care about you. Everything is simple. And when people, whether they're the smartest or the most experienced or the most professional, if they are not about you, it won't work. That's the one thing. And those people around you, if they're not, if you're they're not really on your side, then those just random mistakes just keeps on happening. You're not supposed to know everything. But if your
Yeah,
architect, your engineer, your project manager, if those people are good professional people and their mindset is about the project, you're gonna win.
I love that. I love it. We're here to connect dots as CEOs and
Of course,
developers
of course.
yourself. We're putting one person and another person in a room and see how they work together. And then if that flourishes, we flourish with that. I
Human
think that's
beings, human beings,
yes,
human
beings.
beings.
I love that. That is really strong. So guys, listen up. Human beings, really important who you hire. We hire slow and fire fast. That's what the suggestion I got from a lot of these guys that I've been interviewing, and it is
Wow,
really important.
that's a good one. I'm gonna write that down. I can't say that I'm definitely a slow fighter, that's for sure. But I'm
You got to
working on it so hard.
if they're burning your company is your baby basically. So if they're doing something bad to your company, bye. If they're and that's why you hire slow because when you hire slow and go through multiple stages of hiring, you vet them to the point where okay, I think this is going to work out because you're going to spend a lot of time and money training that person, getting them up.
That's a very good tip. Very good tip.
And it's costly. It's costly. A new employee is costly, and then you don't just look at their pay. You look at their training and all the other things that you need to do to them to get them where you want them to be. And that's why you hire slow and you fire quick.
I'm super happy you
Um,
said that, and I'm gonna remember that.
was there ever a deal that almost didn't work?
Oh yeah, of course. And I'll tell you even something more. When we raise funds for the deal, right? Whether it's equity
Yeah.
or debt, right? When we syndicate the funding for the deal, people always say, "Is it? What do you think? This is it? Is this an amazing investment?" And I'm like, I don't know. I think it's great, but I don't know if it's better than the last one or going to be better than the next one. I don't have the feeling. And sometimes those random, very strict deals that seem very reasonable turn out to be a bonanza of a lifetime. And sometimes deals that seem super inexpensive that you cannot go wrong turn out to be mediocre.
Yep, that happens.
It happens. You really can't tell. It's so market driven and it's so many things that can go right and wrong and things change. Those also real estate development deals, they take time, 5, 10 years. Things change. Think about everything in your life, take 5, 10 years and think how much it's changed.
Oh, for sure. If we just look at just a regular residential market in the last 5 years, we went from all time highs to all time lows. And that's in a 3 year period. And you're like, holy cow, we're going through this wave now. Not as bad as 2008, but we are going through that wave.
Oh
And
yeah.
you're like,
Oh yeah.
you, know,
We've
you,
been
you,
going
you
through that
estimate,
way for 4 years now.
yeah, and you estimate a property value in 2022 and you estimate a property value today. And it's holy cow, that's a big difference compared 2022 to today. And then 2019 was probably higher than today. So it's wow, we did the wave already. But luckily, we're coming out of that wave right now. I feel in my real estate is picking up. We're getting more buyers out there. That's residential. I know it's not commercial like you guys are doing. But if you see residential picking up, commercial is going to follow as well. I'm pretty sure.
Yeah, those market trend the same way for sure. Are we coming out of it? The world is so crazy these days, and and it's so connected, and so many things: inflation, Fed rates, wars going on in different sides of the world, Democrats, Republicans. It's so crazy. It's hard to say. It's hard to tell if we're where things are going, but generally speaking, and that's my belief, and that's what I like about my line of work. Multifamily rental buildings is something that you're always going to have. People have a rooftop over their head all the time, and then no one's going back to living in caves or tents. And we just provide it. Yes, we make small changes, but at the end of the day, look at your house. It's connected to sewer, it's connected to electricity, it's connected to water. Those things, they haven't changed forever. Yes, the kitchen today is more open and there's more modern styles than 800 years ago, but most of everything is the same.
I know that just remember that one of Tony Robbins' teachings is what you can't control, you shouldn't stress about. You can't control the government. You can't control outside sources. You can only control what's inside you and what you can handle around you. So pay attention to that, and you'll go through the hardest winters. Because if you can build a company that survives through thick and thin, it will be fine
Oh,
no matter what. And that's the only thing you can focus on. Don't focus on what everything else is happening outside because you can't control
oh yeah.
that.
Oh yeah.
Love that. One of the things that stood out to me when learning about your approach is the phrase marry the building. That's a very different philosophy compared to the short-term mindset of a lot of the investors they have today. What does that actually mean in practice?
It means that if your investment thesis, if your strategy is a short term win, right? What happens if you meet a long downward market, right? And what happens if things don't fit out as they should, whether it's a bank financing, whether it's cost of construction, whether it is a million different things, right? But if you come to this investment knowingly that it's quote unquote forever, you'll always have the opportunity to get off the train when it stops at the right station. So it's, in my, again, humble understanding of life, it's just counterproductive to think of anything any other way. If you are a long-term investor, if the market jumps and something amazing happened and suddenly everything you touched is quadrupled, you can sell. But if it hasn't happened and you're a short-term holder, what are you going to do?
That's the truth.
And, I,
Guys,
and, I,
think
and I'll
long
tell
term.
you, and sorry, and I'll tell you something. Sorry to interrupt. And I'll tell you something else. I work with a lot of what's called high net individuals, like people with a lot of money, right, from various different industries. And what I notice is that where they want to park their money for the very, very long term for their children's children, they always go for real estate, various different real estates, right? But no one parks their money in their business of whatever it is, a 7-Eleven chain, right? They park their money in a long-term holding in a huge building in the New York City, right? So I'm already in that business. Why would I try to flip it and then what? Get the money, pay taxes, and go do what with it?
Yeah.
It's already there.
No, that makes a lot of sense. So, how does a 20 plus year hold strategy change the way you design or build a property?
That's a good question. I would say, and I hope that the market would agree with me, that the fact that we are considered a long-term holder gives a potential buyer more sense of security, right? And the reason is that when we build a building, it's not like we're spending money left and right without a sense, right? But we would buy the more expensive roof, knowing not more expensive, but better roof, right? Whether or not it's more or less expensive, knowing that a strong roof is a very important aspect of the building. We would spend more money on windows, on things that we know that spending less money on them would come back to us, right? Would buy an HVAC system that's more upgraded, right? We'll think more into the future, knowing that we're going to meet the problems ourselves. And if we cheap on things right now, when we meet them, we're going to be the ones to get all the heat. So why would we, right? So it's basically that.
That makes a lot of sense, especially the way you were explaining how the market shifts here and there. If you're looking at a 20-year period instead of like a 7-year period, because most developers and syndicators, they're looking at a 7-year exit. So if you look at a 7-year exit, the market shifts almost about every 7 years. So you don't know when you're going to hit that. But when you do a 20-year plan, the market can shift twice in that time, and you could hit a really high and say, we're exiting at 14 or 10 or 11 because the market's high now, and we'll go get into a new project. So it makes a lot of sense thinking 20 years instead of thinking shorter term. I love that. I love that.
Oh yeah. We don't marry the building for eternity like you marry your spouse, but we're marrying the building knowing that our investment thesis, our strategic plan is to be able to hold it for whatever period of time that we're gonna, because like you said before, we don't know where we are on the cycle and what cycle is coming, right?
Correct. Correct. What are developers missing when they focus only on short term profits?
I mean, look, I don't know what other developers do, and I try to, to avoid thinking of why do other people do what they do. But when you are aiming for short-term profits, in my opinion, you are missing the big picture. You are missing shifts that you cannot see with your eye, big trends in neighborhoods and even cities. When I came into Jersey City in 2012, 2012 or 2013, it was a completely different story than it is where it is today. Today, it's considered one of the New York's boroughs. It's one of the coolest, hippest cities in maybe in the country. It's fantastic. I love going there. So many restaurants, a lot of cool people, a lot of young people, tons of workplaces. This wasn't the case 13 years ago. You're telling yourself, wow, 13 years, but here you go. It went by.
Yeah, it did. One thing I find fascinating is how multifamily development has evolved. It's not just about units anymore, it's about community and lifestyle. How do you determine which amenities actually drive tenant retention and property value?
So first of all, it's a great question, and I absolutely agree. Multifamily changed tremendously. So first of all, I'm not gonna lie about it. I use my logic. If I look, we look at amenities all the time. We visit our competitors. We go to shows. We go to Vegas once a year. We take a look at what all the shows of the amenities that are coming in and whatnot, and we use our logic. If you, as an example, right? I have a lot of friends that play golf, right? I'm not a golf player.
Yeah.
I'm a tennis player, but I understand the concept. But a golf simulator, in my experience, does not get used a lot because when you want to golf, you want to meet your friends, you want to go out, you want to be in the south, you want to be on the field, you don't want to be in a dark place in the basement of a multifamily building shooting against the screen. In my opinion, right? So that's something that I wouldn't use. So in my logic, it doesn't work. And on the flip side of it, as an example, the cold winters of New Jersey, right, which is 3 4 months of cold, wouldn't you want to drop into a hot sauna? Hey, every day, who wouldn't, right? So it's healthy, it's quick, it's on the way to your unit. Who wouldn't take it, right? So those things make sense to us. And on top of that, of course, we do surveys with all of our tenants. When you have a broad tenant base, you ask your clients, hey, what do you think? Of course, no, we're not getting answers from even 10% of the tenants, but even 5%, still a lot of people. And you get the sense of what they do. And so we use our logic, we use an experiment ourselves for me and my team. We ask a lot of questions. We ask our leasing agents, our external leasing agents, our leasing in-house leasing, and we ask our clients.
That's
Basically.
awesome. That's great. So you do surveys for your tenants, which is awesome. I don't. I look. I lived in rental buildings in Miami for 6 years. I never got a survey from any of them of what we would
We
like.
do it. We do it
It's
all the
amazing.
time. I'm afraid we're annoying them. We're annoying them, but you know what? We're trying to benefit
Improve.
and them as a community. We really are trying. And we do it for many different variety of things. What do you think about adding to your parking a parking storage at the back of your parking? Here's a link to it. What do you think? Of course, we're doing it for you. We want to know that you're going to use it. If you don't have a snowboard to put there, it's meaningless, right?
Oh yeah. Oh yeah. And any other amenities that you could think of that looks great marketing wise, but doesn't really improve the ROI of a building? Like you mentioned the golf simulator. Is there anything else that you could come up with that would
I don't
category?
want to bash
Not bashing
a specific amenity, but I'll tell you what. When I look at an amenity package for a building, and we have an inside architect, we have a designer, we sit down together, all of us, and we're trying our very best to come up with the best scheme. It's not a one man job, of course. We try to think of a package that speaks to the building and speaks with the tenant and speaks with one another. We're not just I see a lot of times in different buildings of competitor and colleagues. I see just pushing in a list. The biggest the list is, the better. Like a buffet. I don't like that. I don't like that. I don't believe that's true. When we build a package of amenities, we want them to speak to one another because a golf stimulator doesn't work well with a sauna next to it. But a sauna
Yeah.
and a cold plunge and a meditation area after you do the
Before you get into that, okay, because I have those questions coming up.
all
That's
right,
my
all
next
right, all right, all right, all right.
topic. And let's talk about that. Okay, let's talk about your new project, Hue Soul in East Orange. Okay, I talked about this with you a little bit before we started the podcast. This is close to my heart. I love this idea. The wellness concept is really interesting. Fitness space, sauna, cold plunge. I'm all for that stuff. I think you could manage long-term living with those amenities around you. And where did that idea come from?
Seriously, I went on a vacation with my family and we were in this in between in transit, and we took just like the best hotel that we could find in that area, and it had that amazing package of amenities, and I was just blown away. I went to the gym. Serious, this is just how it happened. I went to the gym, and next to the gym there was a sauna and a wet sauna and a dry sauna and a cold plunge. And I went in, and I was starting to take videos inside. I was a little bit pushy, and I was sending it to my guys. I'm like, this is amazing, and everything is wood and water and combined together, and it's relaxation, and the and a place to a locker room and a place to put your stuff in, and a towel. And I was like, this should be in every building. It's so easy, and that's how we can. Of course, over time we figured it out how to make it work exactly in a multifamily building, not in a hotel. But at the end of the day, it was perfect. And I could see we were with a family friends of ours, and we could see that everyone wanted to use it, even the kids. It's exciting, right? And again, in a cold place, who wouldn't want to use a sauna?
I love it. When we go to hotels, that's one of the main things we look at and look for is that they have to have a sauna for us to relax in. Maybe if they have an on-site spa where we can take a massage, that is really big for us. We love the gym because we work out or some kind of fitness opportunity. If they have a pool, that works too, if they don't have a gym per se, or if their gym is not well enough equipped. But it's really on the high priority list of what do people do nowadays? Before it was, do they have a bar? Do they have a restaurant? Can I get smashed? Now it's how can I get more fitter on my vacation? Instead of bringing some pounds home, losing some pounds at your vacation.
It's amazing, the wellness, the longevity. Those trends are here to stay. People want to live better. They want to live longer. They want to have they want to better themselves. And I'll tell you something else, and that goes back to choosing your amenities without bashing anything else, right? I don't know if a specific amenity gets better rating than other, but I feel that when there's a big sizable gym with all the equipments that you have and it can hold a bunch of people, there's a community in that. When those people go and sit one next to the other in the dry sauna, there's a community in that. And then when you are feeling better and you're taking care of your wellness and your mindfulness and you're a better person, right? And you have a sense of community with the other people there, you stay. And at the end of the day, what's my agenda? That the tenant would be happy, stay, and that's the perfect client. What more can you ask for?
I love that. I love that aspect of things. And I go to the gym almost every morning and we hang out in the sauna after workout and we have the best conversations with the guys sitting in the sauna. And it does build a community. All those guys that I've met at the gym the last couple of years since we moved over from Golds to LA Fitness. And this is another thing. I do philanthropy. I raise funds for kids in Uganda and I raise funds for scouts here. Every time I ask them, hey, guys, could you pitch in on something? We're trying to get a new track for Pinewood Derby for the Cub Scouts. And every single one of them, here's $50, here's $100. And it builds a community. And they're like, I trust you because we see each other every day. And it's not just that. Business ideas. It depends on what time you go down. If you go in the 8 to 10 time, you get all the business people down there that are like, I don't have to start at 8 like everybody else. I can work out.
Yeah, it doesn't matter. But 5:30.
Yeah, exactly.
It's amazing. It's exactly that. So think about it. And again, of course, everyone has their own thing. But think about it. It's only in your building. It's so effective. Yeah. It's so efficient. You don't have to spend that extra 20, 30 minutes to get to the gym. It's on the way to work.
And the money too.
The money.
It's built into your rent in a way. So think about it. I don't know how much LA Fitness costs up where you are, but I remember when we were in Miami, it was like $55 to $60 a month for your membership, plus your sign up fee was $300, plus this, plus that. And you're like, okay, so now, and every year another charge for maintenance, etc.
Plus travel.
Time. You didn't want to take the time to go to the fitness center because why? Like it's 30, 40 minutes in a big city like New Jersey, Miami, LA. How long does it take you to get to the gym? 40 minutes to get to the gym and then 30, 40 minutes back. And then for a 30-minute workout, sometimes you just don't do the workout because it takes you so long to go there and back. So you're losing out on that fitness level on your body. So it's really important to have those communities that focus on that. One of my favorite buildings was in Miami, the Hamilton on the Bay. It's an older building. It was built by the owners of Carnival. And they had a whole floor that was hot tub, saunas, and 5 or 6 rooms, different muscle group exercise equipment, and a running course around the building on the outside.
That's
I said,
crazy.
it was like, this is it. This is like Mecca. Like,
That,
you could, it was awesome, man.
so we
It was
can't say
awesome.
that we can compete with a real LA Fitness or a gym brand. Of course not. But we give you much more than the basics, much more than the basics. And it's part of the building. It's like you said, it's set up in your rent. It's so easy, saves you so much time. And at the end of the day, our hope is very simple: healthy, happy, successful clients. All we're aiming for.
Oh yeah, I love that. I love that, man. This is a topic I really wanted to touch base more about because it's close to my heart. So you focus heavily on transit oriented development, which is becoming a huge conversation in real estate right now. For people who may not understand the concept, what exactly is transit oriented multifamily development?
So transit-oriented multifamily is basically fits our strategy, which is to be situated right. When people say real estate, they always talk about location, right? So you want to be within reach of the employment hubs, right? You want to be within very close as possible reach to the transportation, right? Whether it's the train, whether it's the bus, and of course the setups of the highways, so that you can get wherever you want. So you want to be there. But that being said, you cannot just go and buy the Fifth Avenue lot and build your building. Someone can, of course, right? So you also want to be as close as you can, but still a little bit out, so you are able to, of course, maintain the investment and be able to execute. And also, it come at the end of the day, it also comes down to the tenant's rent, right? If you're a Fifth Avenue multifamily on the 18th story, you're probably paying who knows how much, right? But we are able to be affordable, not affordable in the sense of the real estate world, but affordable in a way that you are able to afford it, right? You are able to sustain it, and it doesn't have to sit so much on your cash flow, and that to me works it all out.
Okay. And why does proximity to transportation create long term real estate value?
So you can work. If you look at how New York City, as an example, which is a good example for us as we look at it all the time, it evolved according to the train stations, because people at the end of the day, they want to be able to be next to close enough to the train station so that they can reach their office. Even in today, even after COVID, even if you go to work twice or three times or four times a week, you still go to work. And when you go to work, you don't want it to be exhausting. When you have to commute an hour and a half to work, who wants that kind of life?
And last question on this subject, could this model work in emerging markets like Florida or other fast growing Sunbelt cities?
What do you mean?
Our transportation is not exactly like up north. If you know what I mean. Have you been down here to Florida,
I
visited?
mean, I have, yeah, of course, I have, yeah. It's more flat.
So we have Miami has the Metro Mover, but it's kind of short. We have the Sunrail that connects Orlando down to Miami, and then we have some bus lines in Miami. We have bus lines in most cities, but it's nothing like the subway.
But
But
you guys drive. New Jersey people drive as well. You can be an hour and a half away from the closest downtown hub. When look, at the end of the day, it's simple. Most people work at the downtowns, at the hubs of the cities, right? And then the question is, how much money and how much time do they have to spend in order to be within a proximity to that location? And of course, they want to have a good life and some nature and be able to not be within the hecticness of everything on the one hand. And then as the more you get closer to the main hub, the more it costs you. So you want to be not at the outskirts, not too much out, not too much in, but just at the right place where you feel still a sense of security and you feel sense of stability, and you're close enough. You don't have to be 2 minutes walk from your office, but it would be nice if you don't spend 2 hours a day commuting.
oh, for sure, that makes a lot. And then you have all the surrounding like restaurants, etc., in the area where you live, so you can go out at night, have some fun, enjoy
Exactly.
that,
If you're a
but
young
you're still
professional, at the end of the day, what COVID or after COVID, a lot of people thought that a lot of things are going to change. And of course, a lot of things did change. But if there's one thing that didn't change, is that we human beings, we want to be next to one another. We like one another. Maybe we like to hate one another, but we like one another. And we like to be
Yeah.
next to one another. And we don't want to be alone. And in order to not be alone, you got to be within proximity to other people.
Yep. You have to have a social life for sure. I agree with you on that. Real estate cycles can be brutal if developers aren't careful. How do you balance investor returns with building asset that survive multiple economic cycles?
So it actually, this question actually connects almost everything that we talked about before, right? Because like I said, you want to have a simple and clear strategy, right? Of what you're doing. You want to be able to hold for the long term so that the small rotations of the market don't hit you on and make you fall on your back. And then what I like, and this is what I like about multifamily, is it multifamily business, rental business is about cash flow. As long as you're these days, especially these days, all the tech industry and multiples and companies that, not that they don't make money, they don't even earn money, they don't have any revenues, but their multiples and their values are something that I don't understand. We are valued based on the net cash flow that we can provide. And if we can provide net cash flow, we're good. And I like that simple business. I like that.
Yes, some of those unicorns out there that are not making a dollar, but they're valued at billions of dollars. That's always insane, in
Exactly.
my opinion.
Exactly.
How? How? If someone listening today wants to get involved in multifamily investing or real estate development, what's the biggest misconception they have about the business?
It's hard for me to say. It's hard for me to say, but I would say that I hope that they understand that the business is simple, but it's not easy. Those are not the same things. The understanding real estate is simple. Everything's black and white. Everything is clear. The numbers make sense. It's simple to understand, but it's not easy to execute.
Gotcha. Gotcha. And what's one lesson that took you years to learn, but would save a new investor a lot of pain?
You're asking the hard questions last.
Always.
Um, I think that when you're investing in real estate, you're also unless you're doing it yourself, of course, right? You're also investing in people. And if you're, whether it's your GC, the person building it for you, whether it's your general partner, the one managing it for you, right? No matter who is the one that helps you execute or whether it's the broker, whoever helps you execute that investment is also an important tool to understand what's going on. And I think that if I have to think of one thing that I've learned throughout the years on how to execute a good investment plan, is the ability to work with good people that you can trust. Because if he's unprofessional or unexperienced or both combined, or a terrible combination of both, then you're going to learn it along the way.
Yeah, great advice, my friend. Let's zoom out for a moment. This is the last topic we're going to touch on. Looking ahead 10 to 20 years, how do you see multifamily housing, urban development, and transit oriented communities evolving?
Look, as a developer, as an optimistic person, I'm going to have an optimistic approach, right? At the end of the day, like I told you at the beginning of this discussion, we human beings, we're not going back to the caves. We're not going back to tents. We're always going to live in buildings, in units, in houses. They're going to change. The trend is going to change. The colors are going to change. But at the end of the day, the bottom line, we're going to need the electricity. We're going to need the water. We're going to need the sewer. We're going to need the heat and the cool. Those things are not going anywhere. So I have a very optimistic view of that market as a whole. Again, of course, short-term things are going to happen for sure. Interest rate, inflation, all those are going to impact the short-term results. But long-term, we are all going to be part of the residential market. And of course, that with longevity, we're just going to use it more, right? So people leave home these days before after college, and they go into the rental market sometimes for 20 plus years before they buy their first home, which is okay. They're still in their early 40s. Think about it. A person lives on average, and let's say in 80 years, first 20s with his parents, next 20s in a rental building, and sometimes more.
And are we going to see more wellness-focused living spaces like Hue Soul?
Sorry, are we going to see more?
Wellness-focused living spaces
Oh,
like
yeah.
Hue Soul.
Oh yeah, the Sanctuary is our brand name for the wellness centers. Is something that we are heavily promoting. We super believe in it. We believe it's fantastic for the tenants. It's fantastic for the building. It's puts us in a positions us in a very unique way, and we are so into that. And we're of course we're going with over time to make it better. Add a juice place, add a coffee place, add a cafeteria with healthy stuff. We're just getting started.
Oh, I love that. I love that. I was going to mention that juice bars is one of those things.
Juice bars.
Protein
It's another
bar,
business
juice
that
bar.
I have to find someone to help me do because it's so complicated and you want to do it the right way.
Oh yeah, you up there. You could find. I used to work for the Standard Hotel. They're into that stuff, so might want to sit down with the owner or that.
Oh, yeah, for sure. I would love that. I'm telling you, that's what we need, the synergy with someone that can take care of those small businesses within our business. We would love that.
Yeah, I think that would be awesome. So Yuval, this has been an incredible conversation. I love the philosophy you shared today, especially the idea that great real estate investors don't just chase deals. They build assets that stand the test of time. If people want to learn more about what you're doing with Tay Investments, check out tayinvestments.com. You can also connect with Yuval and follow the work they're doing in transit-oriented multifamily development and long-term real estate investing on LinkedIn. And for everyone listening, if you've got value from this episode of Real Estate Roundtable, make sure you subscribe to the podcast, leave us a review, and share this episode with someone interested in multifamily real estate investing and development. Because the more we share knowledge, the stronger the real estate community becomes. Thanks for joining us today, and we'll see you on the next episode of the Real Estate Roundtable.
Thank you, brother. It was a pleasure. Thank you. Thank you for your time. I appreciated it.
Thank you for joining us on Sir Lancelot's Real Estate Roundtable, where we've unveiled the mysteries of real estate together. Remember, in this kingdom of possibilities, every dream home is just a discussion away. I can help your real estate dreams come true. Just call me at 786-449-7518. Until our next roundtable, may your ventures be prosperous and your homes be filled with love and joy. Farewell, fellow knights of real estate.